Good morning. My name is Scott Rudley, Chief Strategic Officer at T3Live.com.
And I'm Brittany Humar, and together we bring you Morning Call. We are seeing quiet markets around the world as Greece gives in its reform proposal late last night, and we await to hear from Janet Yellen later today. Scott, would you have expected a bigger reaction from European indices?
You know, they've come so far. I think the DAX is up 35+% since those October lows, and you know, every few days it's making a new high. So with that being said, for them to be flattish, I think that the whole Greece situation was kind of priced in. It's good to get out of the way. Probably the best thing about the whole Greece situation, you know, the proposal going in, is that we don't have to hear about it, hopefully, for the next 3 months, because I think the whole market just has Greece fatigue moving on. And, you know, you have these indices near multi-year highs, and that's even before the ECB starts some of their asset purchases. So it should be interesting.
And the narrative seems to be changing as to when rates will be hiked, and all eyes will, of course, be on Janet Yellen later today, as our markets have been able to absorb weakness as of late. Do you think they'll be able to continue to do so, depending on what she says today?
Well, there's a whole camp now talking about whether or not, you know, she's going to be more hawkish, because, you know, the minutes of the Fed, which were back in January, were a little bit dovish. So with that said, she starts speaking at 10 o'clock, so there will be all eyes there. And if you look at the chart of the SPX, you know, the methodical move that we've seen since the red dog reversal right here has been very constructive. Here was your reversal when things looked as if they could break down, and they didn't. Here is your push above this 2024 that reclaimed the 8-day. And since then, we've been trending the entire time above it. We broke above a recent high, held above a recent high. Even yesterday, if you want to take a real close look here, you know, we actually retested, okay, which is all it did yesterday in the down open, the resistance of that 4-day little time frame, and held above it. So with that being said, we'll see what happens today. You know, will the market push above 2110 and extend with power, or maybe would it push above and create a red dog reversal? So at this point, I think traders are trying to sit in some positions, but the setups right now are getting a little bit far and few between.
Well, when the Fed shares in focus, it's good to know where the TLTs are, especially since they've corrected since breaking that accelerated trend.
Yes, so I think anyone who's trading the TLTs want to hear what goes on, because TLTs had a correction since it broke the accelerated trend. And if you look here at the chart, you know, we identified this right here. You know, when this broke below the 8-day moving average right around 136, that was your exit sign. That was a nice trend. It's been a nice trend for the majority of the past actually year and a half or so. So with that being said, it's corrected a bit. So, you know, yesterday you had your first little turn up. Here is your new support to write down in the TLT. So you write down 126. Okay, if they happen to be a little dovish, because a lot of people are thinking they're going to be hawkish, then you could see a quick move, you know, up to this 129.93. If they talk about rates in June and she's very hawkish, then you got to be a bit more careful, because I think this little, you know, reflex bounce might not last, and you have more macro support, you know, versus just accelerated, you know, lower. And that comes in just, say, a little bit closer to this 124 area. And actually, if you want to even go further back, you know, maybe let's draw that line, which comes in, you know, right here closer to 121. So we've seen a nice pullback to, you know, just your intermediate spot. So I think this is going to be very much in focus. If they're dovish, quick move back to 130, very hawkish. This, you know, break could continue, and then you have 124.89 and real big support down here closer to 121, which I wouldn't expect today, but maybe over time.
Let's move on and check in on some strong sectors like the Russell and mid caps. Why don't you map out some upper support levels for us?
Yes, these are more my cup of tea that I try and focus on, because this moves, and there are stocks that move within this, not just, you know, one vehicle. So you look at the IWM, still looks good. You know, broke above the recent high here of 121.41. Has been holding the 8-day ever since this red dog reversal around 18, or even down here. So as long as it stays above this 121 area, I would try and be long, especially if you're active. And again, you look at the weekly chart here, it's been in this channel for almost 2 years, and although it feels like it's up a lot, it's really not. So it can continue if the market stays strong, and that goes for the mid caps, which have also been, you know, showing signs of health. Look at this move. This broke out before the Russell.
And the bios have been on a tear. Would you continue to buy or chase here?
You know, every now and then you just got to adjust, and I think the bios are a tiny bit ahead of themselves, which doesn't mean it's a short, but you know, you look at the IBBs, and anytime you're that extended from, just say, the 8-day moving average, which it is right now, I'd rather see you sell some. Okay, this is when it broke this inside wedge. This is when you get excited. This is when it broke back above this, just say 323, and then took out the prior highs. And now a little bit of a topping tail here. I think it needs a rest. It needs to let the 8-day catch up. So I would be a little careful initiating new positions in the bios, and some might even, if we're up a little bit today, short them. And if we trade below yesterday's low of 336, you can maybe have a cute one, but those cute trades could turn ugly if it's not ready.
Well, with all the NASDAQ 5000 talk out there and the Qs leading, would you say overall that's a healthy sign, or is it more of a caution sign?
I think when the NASDAQ leads, it's always healthier. And the whole debate about NASDAQ 5000, is it another bubble? I personally don't think it's another bubble. The valuations are so much cheaper than they were back in 2000, and the buybacks, the cash, the amount of money being made. So, but you have to navigate it based on, how you trade. And if you look at the Qs here, this was, again, when you get excited. When it breaks a downtrend, that's when you get into your meaty position, and then you try and hold some, and you trim and trail. And at this point, a little extended from the 8-day, not so extended. Support-wise, maybe right down 107.76, which comes in right here. So if you want to try and stay with the trade very actively, stay with it there. And then, just like the spiders, see if it pushes above 108.55 and powers above, or does it push above, create a topping tail, and then let some of the moving averages catch up.
All right, let's get in the trenches now with some individual names. Apple, we know it's been a runaway train. If you missed the move, can you still get in now around 133?
I missed the last 6-7 points of it, and I'm just sitting on the side, which is better than shorting it. I know a lot of guys that sold early with me. You look at the chart. We had a really nice trade, buying it, accumulating it in this gap up after earnings, bought more here, and I sold my equity into this 3-day move because I usually sell in a 3-day move. But I was away, didn't get back in, and now boom. So there are some just trying to short this now, playing revenge because they sold it early, or maybe they never even got back involved after this because they were listening to some of the other Twitter guys out there that were shorting Apple here. But anyway, with that said, it's a hard trade now. It's almost turning into a little bit of a pain trade. So what I would do is if you trade this very actively, I think it's flattish. If it were to trade above 133 and stretch a little bit, come below and give you a tail, maybe do a cute short versus that. But obviously, the bigger money has been made long Apple the past few years. I'm not looking for cute shorts, but again, very extended here. So I would just say you have to wait. You have to wait like everyone else if you're not involved.
All right, well, and the rest of high beta still seems to be hanging around. Are you not as excited about names like Amazon and Netflix at these levels?
I'm really not. I looked at them both yesterday, and they've had big moves, and there were better tradable areas. And now you look at the charts; they're still fine. They're still, holding the 8-day moving average. This was Netflix. This is when you got excited after earnings, gave you a nice move. Then you even had a nice setup here when it went sideways. Still following the 8-day moving average, but I'm not so into buying the first down day. If you bought the first down day here, you had to be very patient, not knowing where it would go to. So at this point, perhaps write down this 466. Okay, see if it holds and builds another sideways channel before going again. But these base-on-base patterns get tougher. Same thing for Amazon. It can continue, but at this point, your pivot trade was above this 359. It did try and give you another trade up here, but it's just, it's choppier. It's a harder trade. As rallies extend, it gets harder, but it doesn't really mean it's a blatant short. But these 8-day moving averages sometimes turn into a test of the 21-day, which would still be strong. So at this point, I would just do less with them. All
right, so you're not so excited there, but there is some excitement in solar names. SunPower and First Solar announcing a deal yesterday. Did I see a tweet that you bought some options?
I did. I was looking at First Solar. It was up all morning, and I'm like, you know what? It's acting strong. I made some decent money when they announced that Apple deal. So I'm like, you know what? I don't love the way it trades. I'm just going to buy some $50 calls for next Friday, not this one, next one. So I tweeted out, I'm like, I don't love the way it trades. I'm nibbling on FSLR calls. So then on the boat, I'm going home, and I see the Twitter feed lighting up saying, oh, Red Dog, thank you so much. The options are on fire. Good luck to you. Congratulations to you. I'm like, what happened? And then there was a deal with SPWR. You look at the chart, okay? Just want to show you the chart. This is a nice setup, okay? This is when, you had a break above this, downtrend right here. Or this is when it cleared that area. You had a bull flag continuation and then another one. So this was nice and coiled. So when things are coiled, I like to get involved. So with that said, I wasn't truly in love with the market yesterday, so I'm going to buy some $50 calls. and now it's opening up into this area. Actually, let's see. This gap gets filled somewhere into this 55.42. So I will sell at least half my options, if not all of them, and just say thank you very much. And then we'll see how much of the gap holds to see if the trade continues. And as far as SPWR, it's also up by 10%. The 200-day is right there, and it'll be interesting to see if it reclaims this, which it's above it, or gets rejected by it. But if it gets above it and holds above it, these things could be looked at moving forward. The solar group has been a little weaker because of oil, but ultimately, again, you take the right trade with the right setup, and typically over time, it works out. This one we got a little lucky with the news.
All right, and how about social media names? Some of these seem pretty choppy, yet still constructive. What levels would you say we should watch?
Yeah, I think sometimes we get a little spoiled because we want everything to happen so quick. And with Facebook, you look at the move here on Facebook, above that 77, it was quick, it was powerful. You had a little bit of a little follow through on Friday, then yesterday it pulled in. It actually held that 78 half-ish area that I was talking about. So I would say with a little bit of work above this, okay, and the moving average is playing catch-up, I still think that this could take this out, which is 80.34. The question is how many days does it take? So, right down this area to try and, stay involved in. Same thing for Twitter. People forget it was at $38, before the earnings, which is right down here. So for it to be a little choppier into this, it makes some sense. If you're long it, versus the gap, just hold it there. If you're trying to be a little bit more active and it breaks 47.70 and you want to get out, you can do that too. But I do think higher prices could happen here. But we'll let the stock prove it. It's been from 38 to almost 50. It's a big move. So let's see some sideways consolidation, and then we'll figure out if momentum comes back. And unfortunately, LinkedIn, this is a key rule here, guys. Big gap up after earnings. I was excited about it yesterday also. It tried to push through this 270 and couldn't hold it. So I was long it through that 269, 270, couldn't hold it, got out of it, because when you play a stock for momentum, you have to get out if the momentum doesn't hold. If you're long it from the gap, then you're still in it, and then this is your stop. But at this point, still choppy, not ready. Just keep it on the radar. Next time, make sure there's heavy, heavy volume.
All right, and lastly, a quick check-in on oil as it has been under pressure. Now with an emergency OPEC meeting, do you think the lower end of the range is in jeopardy again?
It seems like it's trying to hold, but there's just, it could be pressured. If someone were to say, Red Dog, in 2-3 years from now, will oil be higher than where it is? Probably. If they would say, in the next month or two, do you think it could make new lows? It could. So it's one of those spots where no one truly knows. And do I think OPEC's going to have an emergency meeting because oil's $5 off the reactionary bounce? I don't think so. But we'll see. Look at the USOs here. This was your igniting move. You had a 20% move off the lows, and now it's trying to hold the lower end of this range. And my key word there is trying. So if it doesn't, okay, you could hear the chorus say it's going to retest those lows, and that would probably raise some volatility in the market. So with that said, right down 18 if you were trying to trade it for a bounce from here. I would get out of the way if it were to break and close below it, and then we'll figure out if those late January lows do hold or not.
All right, so in summation then, any last tips for traders today, especially as we get ready to hear from Janet Yellen?
It could be quiet until then. Yesterday was a very quiet day. It was an inside day. It felt a little weaker than a normal inside day. Again, I go through a lot of these setups, and I don't see so many A+ setups, and you're not always going to get A+ setups. So to make a living as a trader, you have to be able to make small trades on B and B- setups, while the time, passes by. If you don't want to do those, then just do less. So we'll see what happens today. Markets might want to extend if Yellen isn't so hawkish, and we'll figure out if we break through resistance and extend, or break above and have a Red Dog reversal for a break. But either way, I would just do a little less up here, as markets had a big move and it's been a little harder to buy, but it doesn't mean you could blindly short it. So we'll see what happens today. Tune into the radio, and we'll see if we could make some money besides just selling those FSLR calls that will be good to us today.
And as always, happy trading. Have a great Tuesday.